Good afternoon, everybody. It's Mark here at TapeTally.com for your Week 10 recap. Let's jump right into it. Take a look at the overall indexes here. The S&P 500. We started the week, kind of had some blood in the streets on Monday and Tuesday here, but as we can see, the market snapped it right back up. We didn't regain the highs, but we did see some decent up moves here. And that kind of continues here. We have the daily chart that continues on with the NASDAQ. Same kind of deal. Monday and Tuesday weren't that good, but Wednesday, Thursday, Friday were. This is the iShares Russell 2000 index, Dow Jones Industrial Average. So we're looking, and it's basically all the same. Oil had not moved this week. Volatility got hammered again. And the Canadian markets here. So if we back it up here and we take a look at a longer term chart of the overall indexes, we can see here, just like I did last week, we can see that it's still in its channel here. And I'm leaning towards the bullish side, although I am cautious. We're right in the middle of the range here, so it could go either way, and we need to plan. We need to plan for that. So let's just continue looking at this. These channels here, and as we can see here, they haven't violated either way, and we're right in the middle for it. Let's take a look at the USO here, oil, same kind of deal. We did have this breakout here, but we're still consolidating after it. So let's jump right into it. It was an interesting week because we got to see, let's just go back there, we got to see the sort of emotion of this market and how it reacted. So this market has benefited those who buy the dips. I mean, ever since basically the beginning of the year, if you bought on any dip, you were rewarded. So that's indicative of a bull market. Here we got a bit of a bigger dip, probably the strongest one this year and the strongest one since middle of December of last year. And the market snapped it right back up. That's a good sign for those who are long the market and continue to want to be long the market. So let's take a look at some of the underlying stocks here. This week, some breakouts that happened. Sprint Nextel Corp broke out on Friday on strong volume. Buyers are taking control of this stock again, so that may be something to look at. DHI doesn't look like much right here, but if we back up to the weekly, we can see that it is breaking a multi-year high here. That's a good pattern for a long-term position trader. This could move up, anywhere. We could go to 20, 25, maybe $30 here, somewhere in this range in the next few months here. Another stock that I really like, and I missed this one on Friday, but I probably will be picking it up on Monday here, tomorrow, is BSPM, Biostar Pharmaceuticals. I really like that pattern, although it's a bit illiquid, so I will reduce my risk accordingly, but I really like it. I really like that pattern. This is the bottom fishing pattern, and we can see here that buyers are taking control again. So let's take a look at previous week breakouts, see how they reacted. We see here ATP Oil and Gas did okay, still consolidating its breakout from February 27th here. So we'll just quickly run through this. Domino's Pizza, good long-term breakout, and that's a very strong indicator here that this was a decent breakout here. If we don't even give up half of the breakout candle there. Lucas Energy sort of still consolidating, hasn't broken down yet. Saw a good bounce back on Oriental Express, Pacific Ethanol. I think that this one's kind of a dud. Broke out, decent fall through day, but just has gone sideways since then. I think we can keep this one on our radar, but it's sort of dead. This one basically hit its kind of support level here at $1.25 or so, and it's trading below that. Oops. Okay, FX Energy, same kind of deal, still consolidating. A lot of these stocks, especially with the market breakdown there on Monday and Tuesday, we're going to see a lot of stocks also get taken out to the woodshed here. But stocks like this that can hold their breakouts, even let's see, Monday and Tuesday, that was this day and this day. This IBM continued upwards. It had a bit of a down day that day, but almost snapped it right back right away. KBR, um, taking a look, is still holding, still consolidating. I mean, after a big breakout, you have to expect that the stock will pull back or consolidate for a while. So you may be wondering, well, then why don't we just continually wait for the pullback once it breaks out? Well, the problem with that is that the biggest winners typically don't wait for you. They will move right away, and we'll see some examples of that here soon. So, for example, like even ASPS, we look at this one. It broke out here, and we broke down to support back again, but then it just took off right away here, and okay, if we continue on here, Biogen, I'm talking about this one since the beginning of the year basically, and it's sort of still consolidating. There's nothing really too special about it. I mean, we talked about it when it was under 115 bucks. It's 120 now, but $5 move on a $120 stock or $115 stock is not anything. I would like to see a bit stronger. We see the volume decreasing here. That's not a great sign, but see how that one goes. That one's on my radar. CIE kind of already made its move. It's going to fill this gap. It's going to take a while if it's going to continue to move. CKSW, same kind of deal. It just moved so fast. From 10.50 to 12 bucks right away. CXO has given up the majority of its gains. I mean, it's still above support, but this one seems to be quite volatile. Dicom Industries, EBIX, same kind of deal we talked about. It had a good bounce back at the end of the week with the rest of the stock market. Same kind of deal. This one's following a decent trend with this breakout here, so it's a decent one. Freeport McMoran. This one has given up. I think I'm just going to take this one right off my list here. Let's take it right off. FEIC. Breakout. Thought we were going to see more movement here, but fell back to basically almost support. Not quite at support, but had a strong move here on Thursday and Friday of this last week. Green beer companies, sort of volatile, sideways. This one's not great. No pattern really developing out of that one. KLAC, same kind of deal. It's quite volatile. Broke through support. We can probably scratch that one as well. Lululemon. What I'm looking for here is looking at the stocks that break out and continue to break out and how they act. So if we're seeing a lot of movement, stocks are not allowing people to jump on board, that's indicative of a very strong bull market. But right now we're still kind of seeing breakouts not closing toward the highs of their day on the breakout day, which is not a great sign. And we're not seeing a whole lot of follow through yet. It's decent, but it's not really that strong. The retail investor is really not in the market. I think they've been gone basically since 2008, since the financial crisis. A lot of people have given up, and just now possibly they'll be coming back. Look at something like TDG. I mean, this one basically didn't allow you to get on board. You needed to get on board basically on this day or the day after, and you saw a huge move from 100, say 101 bucks, all the way up to 120 bucks in the matter of a month. The LTR, same kind of deal here. Although we did see a breakdown here, I'd be quite cautious. It couldn't make a new high. It attempted to and broke down from that on quite heavy selling, so that's not great for that one. Wolf recovered quite nicely here. We talked about it here, breaking out. That was decent volume here and above that the resistance level. So that's about it. So this week, basically, we didn't see the market move too much, although it was very interesting to see how the market reacted to such a awful day on Wednesday. And as we saw, the market just kind of snapped it right back. One thing I wanted to show everybody here is the tape tally website here. And so if we start from the home, you can register for free on the site, and basically if you want to see the VXX strategy that I trade, there's some information basically on it. It just tells you, introduces you to the VXX, what it is, what it's based on, why I developed the strategy, and just some other questions that people are interested in. Basically, do I actually trade this strategy? Will it be successful forever? These are kind of questions that I've gotten about the strategy. So that may be something that if you're interested in keeping tabs on that. I also post real-time trades for this strategy. We can take a look at how it's done this year so far. So it's done quite well. If you have any questions about this, other than after you read that VXX information sheet, feel free to email me at mark@tapetally.com, and we can talk a little bit more. So this is basically just, you start with $100,000, and we are risking 0.5 risk units, and that's 1.3% of equity is one risk unit. So if we're risking half of that, then that's $650. For example, this is just the first trade of the year. So it's done quite well. I mean, it doesn't have a great winning ratio, as we can see here. It's only about 30% win, about half the time you lose, and the rest are wash trades. But it does have a good positive expected value, and the percent return so far is pretty decent. So if we take a look at 2011 performance, here, just let it load here from Google, we did see quite strong performance. I think this strategy does extremely well in volatile markets. Just bring this up here. So we saw in 2011 this strategy, it won about half the time, lost about 42%, and there was some wash trades in there. So, and the expected value of this one was quite good as well, and the return was, I mean, that's astronomical, but that's sort of with compounding in there from $100,000 account to 412. So that's compounding with every win or whatever. This continues to go up. So that's a bit that pads the numbers, I guess you could say, at the end. But even if you kept an even risk for each one, even as the account grew, you'd still get 116 total risk units. So yeah, that's basically it. If you're interested, go ahead and register. Everything's free, and yeah, that's about it. Trade well.